Hey, Linda, I know you've been working pretty hard on this specific workflow. We've got a pretty good question. Now, their setup is actually for QuickBooks Pro, but to try to build it out so we could try to show the different parts, we did in QuickBooks Online, but the logic is still the same on the
Yep.
steps.
All the steps will be the same, basically,
Exactly.
in this particular scenario.
So this specific question, it's managing club minimums. They're using, like we said, QuickBooks Pro for a sailing club. The club has a snack bar and members are charged $75 a year minimum along with their dues and other fees. The snack bar purchases are applied against the members minimum until they hit $75, and then the members charge for any additional purchases as they happen. They've basically run into difficulties trying to produce their monthly statements and invoices, and we're looking for a better way to try to basically show this information.
Right, they're trying to track that $75. And of course, that $75, when they're billing it out, it's not income yet because they haven't really earned it, right? People haven't bought the snacks. So if we go to, the first thing you have to do is you're gonna make the prepaid income account. So
Let's see here.
So,
So prepaid income account, right?
yep. That's the first.
Other current liabilities we were talking about, prepaid income is our basic setup. We're going to go through each of the different areas. And then you set up the products, right?
Yep.
What were the three you had created?
I created the food minimum one, which is going to hit up on that prepaid income account because when people pay for it, they're going to be paying for it before they actually sell the food, right? So it's going to go to the prepaid income account. So that's the first item. And then even though this is the same account, I made the food minimum applied, so it will show up on the statement that way. So when you send the customer statement, it's going to show that, which this is going to be used on the brain. You'll see
when you're selling the stuff, you're going to be using this to
Correct.
Apply against it. Is what
you're going to apply it, which is actually going to be on the credit memo. It's going to be on the credit memo. So keep going.
And then the food. Okay, here's the food purchases, right? So
and that could be whatever they have. Obviously, I made one, but in one for $10. But you could make it for however many products that you sell. So hot dogs, beer, whatever it is. And then invoice where they're paying, the initial invoice is January 1st that they send out to all their clients, which they can make it recurring. And then, every year these go out on the beginning of the year they owe the food minimum.
They could also even call this like annual membership in a sense, right?
Yep.
Just as long as whatever you're hitting on the accounts on the items that's the important part of it. So, but you can do whatever you wish.
And then you receive the payment on here, which I don't know if that's the next window. No, we received the payment. So you can see there we received the payment, and this is paid. So the customer paid for the food minimum. And then on the next one, you're going to see that now that they paid, you're going to create a credit memo. So in essence, you're taking that money out of prepaid, moving it down into the income account, and it's going to create a credit on their account. So you're going to see that they're going to have, every time someone pays this, once they pay their amount, it's going to show as a credit that you now owe them that $75, right? Because you owe them that in food.
Okay. And then this is the invoice. Like you could have 8 separate ones, of course, but we did one invoice of 8 times 10 being $80 worth of purchases over a given period of time, basically.
Right. And, however many it goes, but I just made one.
Okay. So then this received payment we're showing here is the initial. This is actually the food purchases, that $80 we just showed, then using the credit memo to offset against it. So if you had 8 different invoices or sales receipts, invoices, you would keep reducing the amount of credit memo available basically until it's all used up.
Right. So every month they'll send out a statement and it will just show it starting to drop off that credit. So as they use it, the credit will just start to go away.
And then I think that brings us over to like the reporting stuff here. We pulled up, here's a basic statement that we are showing for it.
Right, so it shows the food minimum is the first line, which we don't have the details, but you get the food minimum and you can add the details onto one of these if you wanted to. Then the payment that they paid the food minimum, then the credit memo, taking that money out of the prepaid into income to show that they owed we owe them now that $75. And then, of course, they bought $80 worth of hot dogs. So they only owe $5 now. That's all that's left because they've applied the food minimum.
A lot of hot dogs.
Yeah.
Okay, so that gave us our profit and loss, ran for the day, cash basis, sale of product here.
That's just showing the minimum rate.
Then we've got in our account, we've got the money that came in, our net income.
And the balance sheet's showing. And if you click on that, you'll see the money in and the money out because the money came in, the 75 came in, the 75 came out because you've applied it.
Perfect. And because we're in cash basis and we haven't actually received the extra $5, that's why we're not seeing that extra $5 at the moment.
Right, because they didn't pay it yet.
Exactly. So then this is just a sales by customer detail report. Same kind of concept, just showing another report aspect of it. So food minimum, again, maybe if this was called annual membership to begin with, then it would be the food minimum applied, purchases, gives the total amounts. And then what we did as a final part of it is we actually went to the customer, right? Mm-hmm. And click on our customer. Did that wrong. Sales, wrong way. Mm-hmm. Click the customer off. And then we did create statement. So you could do this for all of them at the end of the year, basically. And we did a balance forward. You could do transaction statement also, right?
Right, and then you can put more details in, obviously. You can add more details to it. And an important step, too, at the very year end, you're going to have people, if you have that many people, you're going to have people who did not pay, that paid their minimum but never used it. Maybe they never got to wherever the sailing club is and they didn't buy enough food. So you're going to have to do some housekeeping at the very year end to tie all that out, move it out of prepaid, move it into income, because it's probably earned if it's like where I live. You don't use it, you just lose it basically. So you do have to make those steps at the year end to clean it up. But at least this way, you're not having to track your $75 every single month and do spreadsheets or however they're doing it. It's just going to be on the statement and just drop off as they buy food.
You could get kind of creative even with, depending on how they're paying. Maybe there's ways like if they're using, I don't know, I hope they're not using a credit card for a $5 purchase, but if they were doing that, is there a way to like set up rules to automatically trigger to the person or something? I don't know. There's got to be some ways the reoccurring transaction, I think, is a really good idea. Now, if they were, the only other thing that I could see would be a possibility, but the invoicing works great, is you could do an initial sales receipt, which would be taking the initial 75 and the payment kind of all in one, but it doesn't give you the breakdown on the statement and stuff the way you would like. It's not.
And it sounds like if it's like the club I belong to here, it sounds like you invoice it and then they get a payment and then you have to receive the payment. However they pay. I mean, if you invoice it on QuickBooks through their merchant services, they can click and pay and it's done. That makes it a little more automated, but yeah, for sure. I think this will work for them. Save steps, save time, save money, good workflow.
Lynda, I got to give you some mad props on this one for taking the time to like go through each of these steps. You masterminded this and took the time to like mark it all out. We hope, MJ Burns, we hope this helps out. Again, we know that it was for QuickBooks Pro. Hopefully the basic steps or the concepts, you can translate that to desktop exactly the same way pretty much. So this should hopefully get you going the right direction. But if we missed a part of it or is a little bit confusing, because it is quite a bit confusing, please let us know and we'll see what we can do to help out some more.
We love a challenge.
Exactly. Anything else to add to it?
I don't think so. Good luck. And if it doesn't, you need more help, just reach out to us.
Then on that note, here's wishing you a very successful week.
Yes.